Let's get a closer look now at how those potential tariffs could impact one key importing business, the wine industry. Joining me here post 9 is U.S. Wine Trade Alliance President Ben Aneff. Welcome.
Thank you, Scott.
I mean, it's Friday, so people are thinking about this, I suppose. I mean, you've seen this movie before, correct? Under the first administration, you had 25% tariffs on European food and beverages. So does that experience make a difference in how the industry itself is preparing to deal with the potential of it again?
I think it really does, but I think it's a learning opportunity both for businesses here in the United States, but also for the Trump administration and the U.S. Trade Representative. They are starting, we believe, to understand that when they put tariffs on products, they need to ensure that the damage stays in the target export markets overseas and limit damage on products that are particularly depended upon by small businesses here in the United States, like restaurants. So that first round of tariffs, which you referenced around the illegal subsidies to Airbus, devastated the U.S. restaurant industry. It's a particularly sensitive and complicated business, and we're hopeful the administration understands that the next round of tariffs need to avoid that damage.
Okay, you say it's complicated, so let's explain why so, because I'm not sure everybody understands just what happens from producer to your glass tonight, wherever you may have it. So you're a French or Italian wine producer, for example, okay? You have an importer who sells to a distributor, who sells to a store or a restaurant. It's the importer who pays the tariff, passes it off to the distributor, who then passes it off to the customer. Do I have that chain correct?
You're exactly right. Effectively, this is the Dom Perignon wine store problem. There's no such thing as a Dom Perignon wine store. A French or Italian wine producer has to sell it to a U.S. importer. The U.S. importer has to sell it to a U.S. distributor.
I mean, those are the laws.
Exactly. This is the three-tier system of distribution. And those businesses have to sell it to U.S. restaurants and retailers. And because of this, U.S. businesses, mostly small, independently owned, make $4.52 for every dollar they send back to France. This is incredibly different than a whole swath of choices the USTR will have. I'd contrast it, for instance, with, let's say, French fashion goods. A French producer can manufacture it. They can import it themselves into the United States. They can set up their own store in North Park Mall in Dallas or the Galleria in Houston and take 100% of those revenues back to France. So when the USTR is making choices about what products to tariff, they have to begin understanding which products damage export markets and which products damage small businesses here at home.
Okay, I'm going to solve the problem. I'm just going to have a glass of Cab, right, tonight instead of the Italian red that I was going to have. But it's not so simple, is it?
Absolutely not. Those same U.S. distributors, by law, they distribute U.S. domestic producers. So when U.S. wine distributors are damaged by tariffs on imported wines, it means they don't have the financial capacity to bring on new domestic producers. So it actually hurts the sale of U.S. wines.
Does it raise the cost of U.S. produced wines?
The real problem is they lose access to market, and this is why, the Napa Valley vintners are against wine tariffs, Wine America is against tariffs. Tariffs on imported wine do damage to hundreds of thousands of small businesses in the U.S., including domestic wine producers.
So, I mean, we're still, obviously feeling, albeit not to the extent we were before, the effects of inflation overall, and supply chains, things like storage facilities, the cost of storing wine, importers and then distributors store a lot of wine in facilities before they reach the retail or the restaurant level anyway. How have you seen costs impacted on those?
Look, supply chain has been a disaster. Costs everywhere have risen. Small businesses around the country have been heavily impacted by inflation, and these are the types of things that the Trump administration and the USTR is going to have to really consider as they start to implement tariff policies to try to impact discriminatory trade practices overseas. They can't do it at the cost of American workers.